26 years of CNBC TV18.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, this is a show where we solve all your stock-related queries. Before we jump to the queries, let me just take a quick look at what the market is doing. 26,030, around that level, is what the Nifty is trading at, like you can see over there at the screen for you all as well. Now, almost near the day's highest point, 130-point uptick is what we're seeing for the Nifty 50. Broader end of the market, let's pull that up. The Nifty mid-cap, small-cap managing to hold on to good gains in today's trading session, somewhat outperforming the benchmark indices as well. Nifty mid-cap is trading at the day's highest point, so that is interesting to watch out for. Small-cap also 0.8% of gain coming in there. Nifty banks managing to hold on to some bit of a gain, and Nifty IT, that was trading in the red for a bit, has also come back to the green side. So keep an eye out on the Nifty IT as well. Like you can see, it's up to 0.1%. We have PNB Housing. We have some flashes coming in at the bottom of your screens for you all. The board has approved appointment of Ajay Kumar Shukla as the MD and CEO. This is going to be with effect from 18th of December for a period of 5 years. And post that, we've seen that the stock has seen a very sharp spike up in the trading session. This is coming in after the board has approved the appointment of Ajay Kumar Shukla as the MD and CEO for PNB Housing Finance. So important update there. Keep an eye out on that one as well. A lot of individual movers surely are there, whether you look at it coming in from the cap goods space. Transformer rectifiers is buzzing in trade. Thermax is holding on to gain. Siemens Energy on the flip side, Siemens, I beg your pardon, on the flip side is actually trading with cuts today because of the analyst day takeaways that have come in as well. We'll keep an eye on all the stocks. But let's get started with the stock-related queries for today. And we have our experts joining us. First up, we have Shahina Mukadam, who's an independent market expert, as well as Ashish Kyal, chartered market technician, as well as author at Wave Strategy Advisors, to answer all those queries. Let's get started with the first query for today. We have Kalyan, who's writing to us from Kochi. He's holding 1,730 shares of Embassy Office Park REIT at a price of 284 rupees per share, making a profit on this one. He's saying that can he hold the shares for a 3-year time period from now as well? And he's also looking to ask whether he should add more or just book his profits now. Shahina, good afternoon, and what's your view on this one?
Good afternoon, Vinny, and everyone else also, to your viewers also. See, I would suggest that he can continue to hold and he can also add, because recently, as you know, there are some changes in terms of SEBI now allowing REITs to be added to mutual fund portfolios. And I think that would increase the liquidity and the demand for for REITs. And Embassy being the largest, I think it would benefit. Also, if you see, their guidance is pretty strong. They have got about 7.2 million development pipeline, and which should actually enable them to show a good growth in the second half. They are doing pretty well. Even in the first half, they're done pretty well. So I would say it is a hold, continue to hold.
Okay, continue to hold for Embassy REITs. Ashish, what's your view for Embassy REIT?
See, the overall chart looks to be decent. It has been moving on the upside. The only concern remains is the volume, because the volumes have been very timid. So just from the liquidity perspective, if he holds a lot of it, exiting can be a little challenging. So just keep that in mind. But the overall stock pattern the overall REITs pattern looks to be bullish. And I think 429 is an important support. We can expect it to move towards the level of 470 or maybe higher levels.
Okay, we'll keep an eye out on those levels over there for Embassy REITs. Let's move on to the next query for today. We have Mukunda, who's writing to us from Chennai. He's holding 4,215 shares of Kalyan Jewellers. Price is 497 rupees per share. So the buy price is slightly above the current trading price for Kalyan Jewellers. Now, in terms of the other stock they have a query on is JSW Infrastructure. They have 2,154 shares, and they bought this at 287 rupees per share, so they're making a loss on this one as well. Both on the fundamentals and technicals, he wants to know what is the investment journey from here on. Should he continue to hold this? Shahina, both the stocks, what's your view?
See, he can hold both the stocks if he's holding it for the long term. Basically, I think for the short or medium term, valuations are looking slightly on the higher side for both of them. If you look at EV by, let us say EV by EBITDA, if you're looking at it for a FY27, both are around 20 times. So it doesn't make it cheap and it limits the upside in the shorter to medium term. Having said that, after this huge decline that Kalyan Jewellers saw, in the last couple of quarters, as of now, the fundamental performance is improving substantially also. And so it is supporting a bit of consolidation, I would believe, and it will stem the downside from here. If you saw the last quarter numbers, they were very strong. In fact, first half, they have done a growth of in turnover, they are showing a growth of 30% plus and a 70% plus in profits. So I would believe from here on, given that they are adding stores in a very big way, it should consolidate. Maybe you could see some time-wise correction in price, but I think it will bottom out at around current levels. To add, I would say add at lower levels, not currently. Similar story. In fact, I believe JSW Infra is may give you a much longer period of consolidation than Kalyan Jewellers in terms of price, because there I think the performance has been a bit subdued while they are consolidating the overall business, the port business. Recently, they have actually, they are going to invest or consolidate their subsidiaries in railway lines. They're going to spend, I think, around 1,200 crore plus. That is a recent announcement. So it is going to take time. I would say give it another 1 year to see any major upside in the stock. But if you're a long-term holder, it's a very good group and it is going to grow in terms of their port business. So you could hold if you're a long-term investor. If you want to add, I would wait for a couple of quarters.
Okay. Long-term investor, then you can hold JSW. And if you want to add, then wait for a few quarters. On the technical front, Ashish, for Kalyan Jewellers as well as JSW Infra, what should they be doing with both of them? Continue to hold, average, or just book out the losses? What's your view?
The overall Kalyan Jewellers has not done much since almost a year now, and the stock is still trading at around 478 levels. The lower end of the range had been 444, and the upper end of the range had been around 540, 560 levels. So I think it's moving in a range. It's right now bouncing back from the lower end of the range. So my suggestion would be hold on. We can expect it to move towards the level of 540 or 560, where he can look forward for exiting the position. As far as JSW Infra is concerned, we have seen some sharp correction from 350 levels. The stock made a low of around 260, but now showing some signs of recovery, managing to now break above that 20 days moving average after a long time. So hold on over here, maintain a stop loss on the downside for JSW at around 255, and then expect it to move or retrace towards the target of around 300 levels.
Surely we'll keep an eye out on those levels over there. Let's move on and talk about the next stock query for today. We have Siva Raman, who's writing to us from New Delhi. He's holding 1,475 shares of NLC India. Price is 280 rupees per share. Wants to know whether to hold or sell, or what should he be doing with this now? Your view on this one, Shahina?
Vinny, the stock has been consolidating for quite a few, months. I would say somewhere about 1.5 year. It's a PSU mining company, and the government holds about 72% equity in the company. Now, having consolidated for so long, as well as seeing the performance, if you see the last quarter, they did very well. Both in terms of top line growth, in terms of profit growth. So I would believe that given the fact that they have got a good or like they have got coal mines, and especially they're getting more. They're going forward in further tenders. They're getting more coal mines. They are also going into renewable energy. They have got good joint ventures, good tie-ups with other PSUs. So I would say at current levels, continue to hold valuations. If you see, it's not too expensive. They've corrected now. After this correction, it's just about 7 times if you look at it in terms of EV by EBITDA, FY27. So I would say hold, and then you can review what you want to do about it in a couple of months.
Absolutely. And just, note for our viewers as well. We did have NLC India speak to us today as well on CNBC TV18 about that Gathampur plant, Unit 2, which was a long-awaited one. And, quite positive commentary coming in on that front as well. They said that this unit will be operational very soon as well. Unit 3 will be operational very soon as well. And they expect FY26 overall Gathampur contribution to be somewhere around that 4,000 to 4,500 crores. So will be interesting to watch out for, where this is headed as well. But yes, keep an eye out on this one. NLC India on the technicals, what's your view there, Ashish?
The stock has corrected again from around 290 odd levels, made a low at 230. But 230 is a very important price action area because this is where the stock has formed a very strong base earlier in the month of June, July, August. And there is a possibility we might start seeing a reversal upside from here on. So hold on is the suggestion. Maintain a stop loss of 229 here, and we can expect it to move towards the level of around 265 on the upside.
Okay, we'll keep an eye out on those levels over there for NLC India. But on that note, we're actually going to slip into a very short break, viewers. Don't go anywhere because we're going to be continuing with all those stock-related queries on the other side as well. Stay tuned in.
"26 years of CNBC TV18.
Welcome back to your stocks on CNBC TV18. Nifty has moved up a bit further. 26,040 is what the Nifty is currently trading at. Day's highest point for the Nifty 50. But let's keep it going then with your stock-related queries. And the next query for today is coming from Santosh, who's writing to us from Kochi. He's holding 20 shares of Supreme Industries. Price is 1,950 rupees. So he's made a good profit on this one. He's a long-term investor. Wants to know if he can add more shares at the current levels. Shahina, your view, he's looking to add more. He's making good profits on this one. Should he add more for Supreme Industries?
No, I would not advise adding at current levels. In fact, I would say he can book some bit of profit, half profit, wait for the stock to the financial performance to settle, and then he could look to add, not at current levels. Basically, if you saw the performance, they have made a loss. The numbers their profits have come down substantially, and turnover has been like mildly positive. Basically, the competition is intense. They have higher expenses, which is impacting the EBITDA margins. And I would say while second half could be better because they have made an acquisition of Wavin. So they are actually, it's a company called Wavin, and they are looking to, add on their pipe business through this acquisition. So second half volumes also could be better. That is what the management is guiding. But I would say wait for the numbers and then you can add. Do not add as of now.
Okay, do not add as of now. Let the numbers start showing again and then you can look to add. If you look at the stock also, that's been down in the last 1 year as well. It's down almost 35%. Ashish, your view, if the investor is looking to add more, what is the level that maybe they can look to start adding?
The stock has been in a downtrend and it's not stopping anywhere. There is no loss of momentum also on the downside. There is a prior price action support at 3,100, but my suggestion would be to avoid adding because when we can see that Nifty is nearing the lifetime high level, this stock is nearing towards its 52-week low. That's not a very, very positive sign from a relative strength perspective. So avoid adding anything here. Rather maintain a stop loss or book out of existing position is what my suggestion would be.
Okay, that's a view there coming in on the fundamentals and the technical front. Let's move on to the next one. We have Kiran Sridhar, who's writing to us from Chennai. He's holding 500 shares of InterGlobe Aviation, bought it at 5,711. And obviously, the recent news flow that has come in, so he's a bit concerned about it. Now, he's asking whether he should continue to hold the stock for the long term or should he just get out and book his losses. Shahina, your view?
You see, in my view, airline stocks are always best. You have to follow technicals. In terms of fundamentals, if you sort of invest and then forget about it for the long term, you could be caught at the wrong end. Now, for Indigo, I would say it's better to actually at least book half the loss. He's making loss because we do not know what is the impact of the current crisis on the profits. It is going to be negative. But what is the impact? Finally, we will know only after 1 or 2 quarters the exact impact. There are a lot of issues that are surrounding it in terms of negativity. So I would say book half loss.
Okay, book half the loss. That's the word there. And on the technicals, InterGlobe Aviation, what should they be doing now with this one?
We can see a very sharp correction over the past few days, given the event that has been ongoing. And the low which was formed was around 4,640, post which it showed some kind of recovery since yesterday. So maintain a very strict stop loss of 4,640, because usually when there is an event and there is a low formed and a bounce back, that low becomes very, very crucial. So maintain stop loss of 4,640. There is possibility we might see some kind of a recovery, but if that level is broken on the downside, then exit from the stock.
Okay, keep an eye out on those levels over there for InterGlobe Aviation. Let's move on to the next query then for today. We have Sankara Narayan, who's writing to us from Telangana. He's holding 75 shares of CAMS. This is at a price of 794 rupees. He's a long-term investor. Wants to know whether he should continue to hold the stock or even look to add some more. CAMS, what's your view on this one, Shahina? The stock is trading around their buy price, slight bit of a decline from there. What should they be doing?
Yeah, I wouldn't suggest to add at current levels, maybe lower levels. He can look to add. Of course, it's got 68% of the overall MF AUM business. So it is a good long-term hold. Majority of the holdings is with FIs. So they could always look to add, book some profits. So you have to be careful for your buying price if you want to make good money in the short or medium term. Longer term, I think it is definitely a decent stock to hold. Even if you saw the last quarter numbers were very healthy. So I would say hold at current levels, but add only at lower levels.
Okay, add at lower levels. That's the word coming in there on CAMS. Continue to hold otherwise. Ashish, your view for CAMS as well. Would you suggest they add right now? And if at a lower level, which is that lower level that they should be watching out for the long term?
See, the low level on the stock is at around 725 levels, because that's where it has bounced back nearly 3 times now. And if it comes back there, then possibly use that as an opportunity to add. I think the overall the stock should start performing, should reach towards the level of 850 on the upside, and it is just in a range. So give some time to it. 850 can be the near-term target, and 725 is the level to add on more.
Okay, 725 is the level to add on to more if you're looking at that level over there. So that's the levels for CAMS. But, that was the last query for today. Ashish as well as Shahina, thank you so much for joining us as always. Hope you all have a great weekend. And viewers, thank you so much for tuning in as always. Before we actually wind down, I just want to take a check in terms of the market, because 26,040, 50 around that is what the Nifty is trading at. Now up almost 140, 150 points in the trading session. Good recovery that's seen for the Nifty IT as well. Nifty Bank managing to hold on to good gains, as well as the broader end of the market, which is doing well. Mid-cap holding on to gains of almost 1% around that mark for the Nifty mid-cap, as well as a small cap also around that 1% mark. Transformers and rectifiers, there's no stopping that one. Now it's up 13%. So let's watch out for that stock as well in the trading session. Obviously, no specific news flow there, but today that's a stock that's buzzing away in trade. But with that, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Last hour of trade is still left, so do stay tuned in for Closing Bell, which is up next.
"26 years of CNBC